Okay, now here I'm inside of the order flow waves, and we want to pay attention to the order flow waves and the wave volume histogram. So we're giving you a number of choices in how you define the zigzags. Right? So I like the ATR because that way I don't have to change. I let the market determine the volatility. So I'm using an ATR with a multiple of 2 over a 20 period. But you have the option. You can do this as traditional zigzags often will give you that option. We can do it in ticks, points, percentage, or the average true range over the last 20 periods. So that's what I find is most effective here. But you do a little experimenting, choose whichever's right for you. What's important to be consistent here. So if you have the ATR or points or percentage or whatever you prefer in the order flow waves on the top chart, you got to match that in the histogram. So this has to be identical. Right, so you would have the option if you want to show divergence or the no interest signals as well. I'm not sure why someone would not want to show, but perhaps you don't. Maybe you're using something else. So we're just giving you that flexibility here. My default, this would be my default here. I would stay with the ATR. I would want to show both of those, and then of course you just want to be making sure that those all match. Right, color choice is obvious. Right, can do it however to your heart's content, whatever you like. So that should give you a base idea of the foundation of the visual order flow and the graphical order flow here. On this chart here, I have the cumulative delta here. As we start to put the pieces together, this will certainly play a factor in that. But I'm going to pause here the video here so this doesn't run too long, and then we'll come back here and we'll look at the internal, how we're extrapolating from the footprint chart what we're going to show on the chart. Okay, so stand by. Okay, I'm back now here. I've got the same, this is Friday's chart here. Now you'll notice it look a little bit different here. So we've got some brightness here, we've got some bar fill, and we've got some bar outlines here, right? So in order to understand that here, I think it's best to look at this at first in the context of a footprint chart. So I'm going to focus here on this. So I'm going to open this up here so this will really stand out for you a little bit more. So you can see the coloring inside the bar. This is all the more why it's important to use, why I think, right? You don't have to, you can do it however you like, but I think this is more effective if you use hollow body candles. So we get that distinction between just a green candle here and a green candle with an outline and a green candle with an outline and an internal fill. Or example here, a green candle with an internal fill but no outline. All right, so here's red candle fill but no outline, right? No fill but outline. Right? So each one's telling you something a little bit differently. Something a bit different in each one of those events. So this is a good area to focus on here because this is so this is Friday's action here. We've now pushed. Now we've hit this is the IB low is being defined here. So as we push towards the IB high, well, of course you'll note we have a very narrow IB, relatively speaking. So as we come up here and we approach the IB here, well, you'll note that this candle is not only has a green body fill, but it also has a bright green outline, and that carries on until we get up to here where we get a red fill and red out. So what are they? Well, let's go over to a footprint chart and we'll look at that same section. So here, this is some of the inherent advantages of footprint charts. So this is the TDU footprint. Now, of course, there's anything like this, right? It's always easier after the fact. When you're on the hard right edge here and you're coming up to that, at that moment in time, you might be thinking, hey, I've got a candidate here for a double top. Perhaps the IB is something I want to consider selling, because that being the first test. Well, as we hit the bar that actually breaks it, what you'll note here is that we've got the highlighting of the outside of that bar is happening because we have 3 imbalances within the bar. All right, so and then we get another imbalance here, another double imbalance here, double imbalance here. So as the market is moving higher here, it's very clear that the buyers are the aggressors. Additionally, if you look down below, you'll see here, if we look at the delta here, it's going from green to the darkest green here, that's the pivot high. So the delta goes from, as we're approaching the IB, we go from a delta of 21 to 894, 389, 883 to 1165 before we get a negative delta, and that happens on the first down candle. So this entire move here, you're seeing the strength reflected through the analysis in the kind of the color cues here of the footprint chart, so we can see it as it's happening, who's in charge here. So as you're looking at that up here, as you're looking at this price action here, there is nothing here that would suggest that this is a place you'd want to be looking to be a seller. Now let's put that, what we're looking at here is certainly within the footprint chart here and the statistics below. We can get a look at the delta, we can get a look inside the candle and look at the range of it, this being a 9 range candle, we can look inside that range. Now the thing to remember here is, because these are range bars here, the range has to break before we get a new candle. So if you just focus for a second on this one bar here, right, where we see this is the break of the IB. If it was going to be a sell here, you might see the delta switch to negative here. You'd see sellers plow in, but we don't. It just carries on here, and we see additional strength through those imbalances as we push all the way up here. I mean, that's a bigger move, right? Sometimes this is helpful. So just so you realize, that was 28 ticks off of the break with that candle. So there's $362 per contract as we broke up to our first red candle. Of course, it keeps going, right? If you were trading that day, right, it just kept going. So, but this is the area that this, and then the bar and the candles that follow here. I want you to just focus on this until we get up to that red candle. Right, so if we come back to our chart here, what you'll see here is, now here's that bar right here. So you'll note that we have not only the outline of the candle is highlighted in this lighter green, but we have green fill. Now we're doing a couple of things there. Let's go back to the footprint chart. So as we're approaching that here, and you see these imbalances, there's two things that we're measuring. One, we're without going into all the details behind the scenes of what the software is doing, to kind of simplify it, we're doing two things. For the candle to fill, to get a solid color fill, we want to see that the volume, that the majority of the volume is in the upper or the lower third. So for example, if I come back here to our little line chart drawing here, if you just look at this, think of this as a candle, right? You can just think of this as a 9-bar candle. So for the market to break to get a new candle, get my little line tool here, there's buying and selling that's happening within that bar, right? I.e. the footprint chart. You can see what's happening, but until one side gets more aggressive, we need to have aggression, or buyers taking control or sellers taking control, to get the new bar. So what we're doing here is we're essentially saying, if there's more volume here in the top third, or if there's more sell volume here in the bottom third, that would be a notice of momentum, and if it pushes to the next bar, in order to get to that next bar, we have to have buyers be aggressive here to create the next candle. So if the volume, the majority of the volume is in the upper third here, well then I want to fill the bar green. If it's in the lower third, then I want to fill the bar red. Now, so that would be just the volume. That's what's coloring the inside of the bar. So if we come back here, what's causing this bar to go green inside is that I can see that the majority of the volume is on the buy side, which creates the next candle, next candle, next candle. All right, now note here, on the next candle, I do not get a color fill. Right, so the volume is balanced. So if I come back to that, it's the next candle here. So this is the next candle you're just looking at. So I have an outline here, right? You see that reflected via the stacked imbalances here. Here I have no outline here, because while I do have one imbalance here, I can see, if I zoom in there, you can see that the volume is fairly evenly distributed. Right, so if I just looking here at the numbers here, it's fairly evenly distributed. So thus, unlike here where we had more volume at the top of the bar to create the fill, here it's evenly distributed, so I don't get the color fill. But because the delta is positive here, and we're measuring that on a very short-term basis, and then using a moving average to kind of smooth it out. As the delta is more we have positive delta here, and I'm kind of simplifying. So because the detail behind it is not really what's so important, as you understand that you can see it here. So we're trying to replicate what you're seeing in the footprint chart here. Okay, where's the majority of the volume happening? Upper third, lower third. And then if we look at a very short-term view of the delta, which is just the difference between the buys and the sells of the market orders, we get a number here. So if we come back to that chart here, we can see here, remember 21 to 884 to 369, 883, 1165. Obvious aggression amongst buyers as we're pushing higher. So what we're doing is taking a very short term, because a range bar, as we're looking at here, range bar has no concept, there's no time component involved here. It's just distance of the move. So for us to get a new bar, we've got to go one tick beyond, in this case, a 9 range. We've got to get a new tick here, so a new bar. So for us to break out of this range, we need aggression from the buyers that be willing to take that price up there to create the next bar. Right now, the next bar could go one tick higher and then reverse, but at least we know that there was enough aggression there so that we would look at that and say that's enough to color the bar. For the delta, I want to see that the delta on a small time frame, like a 15-second range, if we looked at the delta on a 15-second range and then we took a moving average of it, as long as that is above a threshold, then I want to outline the bar, right? So as you can see it here, again, the aggression is evident here on the footprint chart, but I don't necessarily want to look at that footprint chart. I want to see that reflected here. So thus, all three of those candles have the outline accented here by the lighter green color because it was all delta positive. Now we get a little pause here, and the market essentially just goes into a little consolidation, which is very typical. It's how the market likes to move, particularly in a trend like this. We get a rally, consolidate, or base, and then the rally. Right? Are we gonna sell off, or are we gonna continue? Well, here we'll note as we come out of that consolidation. Of course, if you had the volume profile out here, you'd have a higher volume node. Since we stalled here, since we got here at 11 and we don't leave until 11:15. So we spent 15 minutes here. So you know that there's going to be a high volume node on the volume profile. But as we come out of this, remember there has to be aggression here to get out of this consolidation and to create the new bar. So you'll note that the outside of the bar is highlighted here because that tells me we're delta positive. So if we come back here, you can see that. Right, as we come here, we get not only imbalances, but look at the deltas above the bar, 369, 833, 1165. Now here, I get a combination of both a negative delta. You see that reflected down here as we see it here, and you get the delta divergence signal here. So we've got a new high here, but all of a sudden we've got a delta flip. All right, so we've gone into a negative delta. You can see here the aggression amongst sellers. They're looking to take it back at least to the IB high to challenge this, but right, what you end up with right here is trapped sellers right there, right? So they've thought, oh, market's coming down, market goes up, so these guys this is pretty good size here. They're likely trapped down here. Now, of course, it could be a limit order, right? We can't make that distinction. That's one of the trade-offs that you make here. While I have greater insight, I can't make the distinction. It becomes a bit of a with experience, a bit of an educated guess here as to what stands out. Well, that's a fairly big, at 538, that's a fairly big size there. Now, do we have any way to know whether it's a limit order or whether it's aggressive selling? Well, the size stands out. So you're making an educated guess here that may well be a buy limit order here, but then we can see up here at the top of the market here we get that imbalance here, so 128 to 3, and then we push to a new bar here. We're getting imbalances. Now this is that consolidation period here, because all of a sudden the thrust is kind of gone from the market. So as we come back to our little example here, you can see we waffle here. Right, so I like that I can see. I don't have to go stare, look, try and decipher what's happening in the bar. It can be happening fast. You're on the right edge, going, God, is that a sell signal? I don't know. Is that a limit order or a market order? I'm not sure. Right, this takes a lot of time, a lot of experience, and really a specialization in working with this. Whereas for most traders here, myself included here, I prefer the visual representation here, thus the visual order flow. So we're trying to get the benefit of what that candle is telling me represented here on a candlestick chart. So note here as we come out. Well, the first thing you would note down below, right? I mean, are you really in the face of this? Are you really thinking this is a time to be a seller? Maybe you're a counterpuncher and you're always looking for something that's overextended. I can't. Every trader is going to approach this a little bit differently, but certainly. But as this is accumulating here, well, right here, you would only be at this level here. You haven't got the last kick on this. But at that moment in time, you certainly can look at this swing here. So if we were right here, right, we can look at this swing relative to this swing. Certainly no potential for divergence there. Right, and it just keeps going. Now we don't actually get divergence until we get to the pivot. Now we looked at this earlier here where we have this massive wave of buy volume here, and then we do get a higher high. Now note at the higher high, I get two things. Right, I get the volume divergence, as obviously, right, buyers are losing enthusiasm here, running out of steam. They don't show up to push it higher, so I get divergence, but I also get a no interest short. Well, that doesn't last long here because I'm 3 bars here before I get a no interest long, because you can see here this sell wave here is less than this, so thus the no interest long, which essentially takes us up to a double top. Remember, as we started this morning, every pivot is a potential double top. So, right, our buyer is going to show up to drive this higher again. We'll look below, right? They don't show up. So we get momentum down, meaning that the majority of the selling in this bar, or the majority of the volume, was in the bottom third, which colors the bar. Now I get a little bit of delta steam building up here. So let's see if I go back over here. That's as we're up at the top, so that candle would be, this is us starting to top out. So here that candle looks like it's right here. So you see imbalances here on the way down. So this little swing is essentially doing the same thing, right? There's our pattern, right? Again, it's all the market ever does. Swing, retrace, leave some unfinished business here now, but note the delta here. So we've gone from 38 up here at the pivot high where the market is making a decision. Are we going to keep going? Now we go to 653, 176, 679, 709. Here's the highest delta of that range, and then up. Now all of a sudden the delta flips, and immediately we go into more of that upside delta here. So you would anticipate, given the imbalances that we're seeing here in the volume, well, here you can see the volume is more on the upper half of that, or the upper third of that. So now if I come back here, we can see that reflected. So as we come off of this low that we just looked at, as we start moving higher, you'll note, right, as the delta switches from as we were just looking at here, these bars here are represented over here in these bars here, right? Outline, center color. So I know momentum is higher, the delta is higher, buyers are the more aggressive here until we get up here. Well, then we fall into another measured move, right? But here, this again, I don't know if you're trading this at what would that be, 2:30 in the afternoon. You might actually. I've got a nice little pattern. Well, so here again, as we were talking about before, and we've looked at this a couple of times. Here's the pattern completing. Now, are we driving lower here into the end of the day? Again, we looked at this before. Or is there something else happening here? Now, note here, I've got mixed signals. I've got a green coloring. Well, if I open that up, I've got green inside the bar, but I've got a red outline. So this is a mixed signal. What would give that more confluence is the fact that I've got volume divergence. Right, so I get not only divergence, but I get a no interest long, and then the next bar here colors, and then I get an outline. So remember, this not only the divergence as well as the triangle here are not going to show up until we get to about here. So we've gone far enough. If you didn't do it that way, you just have false signals all day long. It has to get far enough to where we confirm that's a pivot, and then the little triangle will show, and the divergence signal will show. Right, then green, 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 green. Now I get up here and I get something similar here. I've got the majority of the volume is in the lower third of the bar, but I've got a green outline, meaning the volume was still delta positive. So if we look back up here, that's going to be the last one of the day. Here, let's get that back down here. So that's here, right? So we've got, look, we've got stacked imbalances, big bar, and then all of a sudden we start to sell off. Now we're back to the end of the day here. So this red candle here, that's our last one. I think we can see that reflected right here. All right, so we've got, if I come back here, we've got this candle here, now as we roll over and we get a negative delta here, you see that that is reflected as we start to come down. So thus the momentum, now the next candle showing that the sellers are the aggressors. I've got momentum as I've got a color filled, down we go, right? But I just pop into a 50. Up we go. So that should give you some insight as to what's happening there. It takes a little, just you got to spend a little time with it here so you can read this on the fly. And then as you, I think it's helpful at first as you're deciphering what's happening. Now, then as you get more comfortable with it, you can squeeze in and get a little bit more, and then you can, now that you understand it, you don't need to open it up and say, why is that outline? Is that outline different? Again, now you can do these in whatever color combination you like, but I think it's easier to spot using hollow body candles so that fill stands out. We go back to the next day, same kind of thing here, just looking at multiple examples. So here, as we come into that measured move, well, so you see the candle obviously turns bright red. Now I've got delta, sellers are in control that are more aggressive here, even though I've got a little retrace. In fact, that looks technical. Even though I've got that little retrace there, as I come up to that golden zone here, I get it again, right? So while I'm there, there's no signs here of buyers overwhelming the market. If anything, right, that would be a confirm. So as we break that, right, now you get the outline here, down we go towards target. Now we're down here at this target, right? So here, this is a good example here, because we looked at this previously. Would it be enough? Well, you could make the case that it would be enough to see that divergence as we head back toward, because it's the first break of the IB. As we head back in, there's particularly advantage in my seeing that the momentum, i.e. the color, the internal coloring of the bar, and then the outline telling me that the buyers are the aggressors here. Now, it doesn't go terribly far, but by the time I get to about here, that's going to fire. Now you can see it. Now you can, if you're very aggressive, by the time we're here, this will be evident to you here, but it won't confirm until we get a little further here to where we can confirm that that's a pivot. But if you wanted to try and front run it here, I mean, you can see it, right? You'll know that that's there, but you have to just be leery of the possibility that that is just a false, and then we come back down. So that's why it has to go a certain distance before we confirm that, so there's not just a series of false signals throughout the course of the day. Same thing here. Now, here's the pattern. We're right in a golden zone. Look down here. Does this look like sellers are jumping in to drive it lower? Well, of course, just the completion of the bar right off the bat would tell you that perhaps not. So not only do I have green coloring the inside of the bar, I've got the outline colored. So you might not get that locked in till this bar right here as we get far enough from it. But on the first little retrace here, so if you were a little late here, you got another opportunity right here. So essentially what we're doing is, and this is ideal, and when you see this, you can take advantage of this. We're coming back into all of that strength there. So if what that's 1106. God, can I do this on the? So here was the bar, right here. So we're right in a golden zone right here. So it's coming off of that bar. So we can see here that there's a lot of selling at the bottom of the bar. Right, you can see that the majority of the volume is here. But now as we go to the next bar, now if you just look at that, it may be a little hard for you to see that here. But you can see here there's way more volume on the top of the bar, right, on the top third of the bar. Oh, shit, can I even do that? Here, maybe I can do it this way. Right here, right? So I've got way more volume. So it doesn't like it with footprint charts. I got way more volume here than I do down here. Right now here I've got a lot of volume down here. Now we go to here yet again. Here's more volume down here. So you can just looking at that, I know that momentum of that the inside of that candle is going to be red. Now here I'm starting to push higher. I know the inside of that candle's on the other chart is going to be green because I can see the volume is there, and then I can see the delta here as it's increasing here, and I've got these imbalances here. I get the outline. So as we push higher, right now here's where it changes. So you can see that reflected here as we come off of that here. So here's the green. Now we've got mixed signal here. We've got red on the outline, but we've got green on the inside. Here you can see the big wick that it leaves. Now we come back down to test that. It's just a I mean, that's a well, on a night. It's probably technical. It looks like it's a golden zone as well. So just you can see some of the advantages here. Oh, it looks like that broke slightly, but so that's why it wasn't marked. But we're coming right back to test that. Now up we go. So if you were unsure, now we look here. Oh, now all of a sudden we got two bright green bars here. We come right into the prior structure. What do I get? The volume divergence. All right, I don't have a no interest long. Pardon me, no interest short. I don't have a triangle there, but I do have divergence. Interesting, right? Same thing here, right? So I've got a no interest a short here, right? As here, there's no buyers do not drive it higher. Back down here, did they have a chance to drive it lower? Nope, I don't. So I get a no interest long. It's not a new low, thus no divergence. Right? So this is just one of those swing, retrace all day long. You're just essentially range bound. Okay, I think that covers the mechanics of this. Now let me pause here, and we'll put this all together in the full template with the cum delta and some of the other things that we would recommend that you trade this with. So back in a sec.